In recent years, a clear reality has emerged that can no longer be ignored. A significant portion of client capital invested through banks and large wealth management structures has failed to generate real value. This is not a matter of perception or isolated cases. It is supported by measurable evidence. According to Financial Times analysis, approximately £67.4 billion is currently invested in funds that underperform their respective benchmarks, despite being professionally managed and widely distributed through banking and advisory networks. In many cases, this underperformance is far from marginal. Over multi-year horizons, several funds have delivered results 20 to 25% below their benchmarks, net of costs and fees. Even major wealth management institutions have publicly acknowledged the issue. A leading UK firm disclosed that around £24 billion of assets under management failed to deliver value to clients, largely due to high costs and ineffective investment decisions. The core issue is not market conditions alone. It is the net return delivered to the client. Independent analyses consistently show that, in many cases, fees and weak tactical decisions consume a significant share of potential returns. As a result, real investment performance has become one of the main drivers of client dissatisfaction and a key reason why investors are moving away from traditional models in search of more transparent and effective approaches. At Global Asset, our work starts exactly from this point. We do not sell products. We focus on the quality of analysis and strategies that sit behind every investment decision. Our approach is based on a simple principle that is often overlooked. Without a structured and truly adaptive analytical process, management becomes a narrative rather than a strategy. This is why we develop in-depth, context-driven asset analysis, genuinely active strategies designed to adapt to changing market structures and disciplined decision-making processes focused on risk control and contextual coherence. The objective is not to make promises or to beat the market rhetorically. It is to restore discipline to the decision process, reduce exposure when conditions are not aligned, and act only when the statistical context justifies it. In complex markets, the difference is not what you buy. The difference is how you analyze, how you read the context, and how you make decisions. This is the level at which Global Asset operates every day.